And I'm getting a little personal here. Do you have a wife?
I
Kids?
do. Yeah.
Kids?
I've got a 13-year-old daughter.
Okay. So like, does your wife bust your chops that like you're like a social media whore, always on social media?
She's
Are you on
gotten used
social
to
media more than your 13-year-old?
it. Well, yes. In different ways, I am.
There are just too many commercial loan brokers that don't have a damn clue of what they're doing. All we're trying to do here is better the industry for everybody. At the end of the day, you can make great money in this industry, but in the end, it's all about helping people. You know, people always say, Chris, how can I be a successful broker? It's 2 words, hard work and dedication. If you don't like talking to people, you probably shouldn't be in this business. Hey, everybody, welcome back to Entrepreneurs in Finance. I'm Kris Roglieri, and this is where we explore the days and lives of both CCTG brokers, CCTG lenders, and people that are just in finance that are doing good and great things. And in this episode, I'm very, very curious and proud to welcome Chris Lehnes of Versant Funding. Hey, Chris.
Hey, Chris, how are you today?
I'm good. How are you?
Doing great. Thanks for this opportunity.
Absolutely. You know, this is, for me, it's a very curious, fascinating interview because, you know, I've seen you around a long time. I mean, I think one thing that you do well is brand yourself to what you do. And be honest with you, a lot of people that work at lending institutions, whether it be bank or private, don't do a good job of marketing themselves. And I was always fascinated by, you know, how you market yourself, and I'll get to those questions later. But
Great. No, thanks.
yeah, this is good. So why don't you tell me, tell me what first, tell me the place you work for, Versant Funding. What do you guys do?
Well, we are a factoring company. Essentially a non-recourse factoring company, independently owned, independently funded, and our target is providing funding to businesses that don't qualify for financing elsewhere. So, I want people to think of us for new businesses, rapidly growing businesses, businesses that are going through a tough time, seriously distressed businesses, situations where the owners have maybe terrible credit or even character issues that they're working through.
Right.
I don't care about any of that.
Yeah.
All I care about is the quality of the company's accounts receivable. That's all I care about.
Yeah. Yeah. And so let me take a step back. I know a little bit about, I used to own a factoring company.
Oh, is that right?
I did. And so, I did that for 10 years and eventually sold it, and we were non-recourse as well. So we have a little connection here.
There you go.
But did you ever grow up when you were in college and said, I want to do this thing called factoring? Or what did you aspire to be when you were younger?
No, man, I didn't know what the heck factoring was right before I started doing this. I graduated in the early 90s from college with an economics degree. That qualifies you to do nothing, essentially.
Right.
So I applied for every entry-level job I could, every bank I could find, and eventually got hired by a bank to push paper, documentation. And I'm like, okay, now this is my career. I'm going to be a banker.
Right.
And then after a year of banking, a local small bank in New Jersey, I got recruited by AT&T Capital. I'm dating myself a little bit here. AT&T Capital.
Okay.
And it's a division of AT&T at the time, and they were formed to finance equipment for small businesses. And they had just started up an SBA lending group, and they needed people to push paper for the SBA lending group. So I'm like, okay, I'll do that. I didn't know what a non-bank lender was at this time.
When you say push paper, like were you a BDO or were you just
no?
Were you just literally pushing paper?
Yeah, I'm sorry. My bank job was literally preparing loan documentation. We used typewriters to type up UCCs. I used my WordPerfect to draft documents. I was literally preparing documents.
Wow.
And then when I got hired by AT&T, it went a little further in that it was more like a loan closing coordinator. So, gathering paper, working with attorneys, doing that kind of stuff. And that's how I got into AT&T Capital. And then it was given the opportunity to do lots of other things at AT&T Capital. So from documentation, moved into credit underwriting. Still, this is all SBA.
Right.
All we did was SBA lending there.
Right.
Then moved into operations management, oversaw a group of underwriters and closers. Then moved into our business development group, where I oversaw our lead generation, our marketing, our national account programs. And, I just took you over about the span of 15 years at AT&T. And we got bought by a company, we got bought by a Japanese company, and eventually we got bought by CIT. Okay. So for my last decade or so at this company, I was with CIT's small business lending group.
So you're an old CIT guy.
Yep. Yeah, there's a lot of CAT people sprinkled all over the universe. I'm sure you've worked with many over the years.
Yeah.
And so I supported the sales group. That was never a field BDO, but you know what? My group put together programs to help feed deals to the BDOs. We had a lead gen group that had national accounts that would bring in leads and then we pass them out to the BDOs.
Got it.
And after doing that for quite some time, I got recruited by another non-bank lender to go, come on, Chris, come over here and help us do some of the stuff you did for CAT with us. And I timed it very poorly. I timed this just as the credit crisis was hitting. So this was fall of 2007.
Now, hold on a second. Was that BLX?
There you go. You win the prize.
No,
you win the prize.
Because one of my longest running employees used to work for BLX, John Cosentino.
Sure. I knew John when we were over there. Yeah. So,
okay.
I joined that company just as things were not going so well there.
Right.
So I joined a group to help do SBA loans, and we actually stopped doing SBA loans right after I joined. So, for a time, they're like, okay, well, we'll do conventional real estate loans. That never came through. Okay, we'll do Fannie Mae. Then Fannie Mae blew up. And the company went through a number of different layoffs, and I stuck around. They would have a room for me at some point.
Right.
Changed their name. We became Sienna Capital at a point there.
I remember that.
And then eventually they called it quits. Like, okay, this isn't working.
Wow, that brings you back memories. Yeah.
Now I'm literally packing up my office to leave this company for the last time. But my next door neighbor was Mark Weinberg. Mark oversaw the factoring group that worked with, the idea was that, okay, the SBA BDOs for BLX will have factoring to sell as well.
Yep.
As I'm leaving, Mark's like, well, why don't you come work for me? Help me find factoring deals. And I go, okay, I'll do that. And the idea, and this
Did you even know what factoring was?
I knew of it because we had that product at BLX at the time.
That's
and
right.
I went through a credit training program a decade before where we talked about factoring. Right. That's really all I knew. I knew a little bit from Mark. I knew a little bit from being at BLX at the time, but total novice. My whole career was SBA. That's what I knew. And factoring seemed scary and crazy to me because I didn't know much about it. Yeah. Well, I figured, okay, I'll bide my time with Mark and I'll get an SBA job in a few months. Well, the world was a little more unraveled than I realized at the time. Mm. So after a few months, I was okay, no, I do this now. I do factoring now. And so, I educated, and Mark is very knowledgeable. So Mark helped me in that education process. And I'm sure, as you know, and a lot of your listeners know, through trial and error, through doing, you learn a lot about this program. Sure. So eventually I figured out factoring, and that's how it happened. So it wasn't through some strategy, some grand design. It was a little bit of good timing, a little bit of bad timing that led me to factoring, but I've been doing it for about a dozen years now.
Okay. All right. Yeah. it's funny how small this world is. I mean, I know Bobby, who, owned BLX.
Sure,
I mean,
sure.
I just, I try telling people this world is very small, but it's also big. Mm-hmm. But we all kind of run in and bounce into each other. And boy, you took me through that 2008, brought back a lot of memories. I remember the emails that would come out from, I remember it was no longer BLX, it's Sienna, and here's what we're doing. And
right. They were trying hard to find a way to continue on, and it just, and I joined right at they had a great run there, but I joined at the end of their great run, and didn't work out well for me. So in the end, it did.
So you got thrown into factoring. Tell me something. Why and you know this better than anybody because you're really to me, at least on LinkedIn, you're the poster child of factoring because you're an animal on LinkedIn. But I'll get to that. Why do you think most bankers? Because I used to be a banker for 3 short years before I got let go and started my own company. But why do bankers fear or don't understand It's like when you bring up factoring, they think it's for companies that are going down. They're like a year or they're a month close to bankruptcy. I mean, why is there that stigma, you think? Where it's in fact for companies that are growing.
Yeah, it is for companies that are going in the right direction. But I think some of it is just misinformation. Yeah. And we're entering a new generation of banker, but the generation of bankers that are now getting old, they learned banking through their bank credit training program.
Right.
And few banks had factoring. So I think that was part of it. They were never really taught about factoring.
Right.
I think part of it is there are some bad actors out there. There are some scuzzy factoring companies out there. Yeah. And so they've heard that one story about that guy who got ripped off by their factor. Right. And so I think that lasts as some of the bad taste in people's mouth. I think part of it as well is business owners, don't talk about the fact that they're factoring. So very often
it's almost like you got a disease. Like you don't want anybody to know that you're factoring because that means you're in trouble because your banker told you that.
But the reality is, while you're worried about the fact that you're factoring, don't want anybody to know. Many of your colleagues are factoring also, and they're not telling anybody either. So everybody's got this dirty little secret that they're funding their business through factoring. So that doesn't help in bringing into the, sort of into the sunlight.
Yeah, and the reality is, we used to tell people, our customers, like, the reality is, big companies, account debtors like Walmart, Home Depot, a lot of these big companies, they're used to factoring. I mean, a lot of the people that they have product in their store factor. It's just, they get it. The big boys get it. It's just
I have that conversation every day, Chris. Well,
right.
What are my customers going to think? Well, your customers are Walmart and Target. They are paying thousands upon thousands of factors.
Yeah,
this is a non-issue. This is flip a switch in an AP system. This is not an issue, but people worry. People worry about it. So.
Yeah. In fact, we used to, I do know that at particularly Home Depot, they were an account debtor for a couple of accounts we had. I was told that in the accounts payable, they're actually, like, they have almost full-time people just to deal with confirming invoices from factors. I mean, so they get it. You know what I mean? Like, they understand it because so many people do it. And
yeah, they know their suppliers need this to survive, and it's so commonplace. But business owners don't go and tell their buddies, "Oh, I got this great factoring deal." They want to brag about the great bank deal that they got.
Right.
So they'll get there maybe someday, but factoring will help them get to that great bank deal.
Yeah, and I've given some speeches at chambers of commerce and different things, and I've actually had people come up to me and go, I didn't even realize that my AR was an asset that I can leverage. And I don't do you mean to tell me I don't have to wait 60 days to get paid? Like, I've had those conversations, and
Oh, it's very true. It's business owners don't really know about it. What they know about it scares them. And I'm sure we'll talk about this later, but that's why I don't market my services to business owners. They don't always get it. I want their trusted advisor to tell them to call me, because the business owner hearing from me, the factoring them.
Right.
That's for failing business.
Right. Yeah. Fears of influence. And I always say, look, they're a rock and a hard place. You have a love-hate relationship because they're the people that see deals, right? The CPA, the banker, the consultant, the turnaround guy, they see the opportunity, but yet some of them will kill deals. I mean, because the first, when you put out an offer, they go to the CPA and, listen, I hope, if their CPA's watching this, I say, look, I love you all, not all, but most, but not all. They fail to, like, properly give guidance on if this is a good idea. Do you find that?
Yeah. What the CPA often wants to do with factoring is they want to do the math. Oh, wait, you're paying 2% per month, but boom, this is your rate. Like, well, let's talk about what we're allowing this company to do. This company has, let's say, 35% gross profit margins. Yes, now they're going to give me a couple points of that in exchange for almost essentially unlimited liquidity. That's to think about. That by using my funding, they're going to make the remaining 32% margin versus passing on a deal.
It's directly correlated to your gross profit margin. That's it.
Exactly. But that's where CPAs can get tough, is they want to do the math. They want to show, here's what it costs. Well, yes, but what are the alternatives here? Yes, if you can go get a prime -3 loan, go for it. But my client can't do that.
Right. And I always say a discount rate is different than an interest rate. I mean, a discount's a discount. I love bringing up the 2% net 10 principle, because a lot of people are used to it. And I always say, is that an interest rate? No, they're just discounting the invoice to get paid.
Or they'd accept a credit card and pay a couple points to Amex, and no problem. But okay, it's akin to that. But it's a challenge. It's as you're coming from factoring, you must know that it's a conversation you have over and over again, and so
all the time.
Part of the game.
So what's fascinating, what I always found fascinating about you is, I would open my LinkedIn account. And I admit, I'm not the best on LinkedIn. I mean, I own a whole marketing company here, and I'm probably the least versed at LinkedIn, even though I own a marketing company, but digital marketing company. But I'd always see you on LinkedIn, and I'm like, man, this guy's doing it right. And it's almost like you've created, I don't want to say a meme, but you've created like this thing where, like, you're synonymous with factoring. Like, Chris, you got a factoring deal. It's Chris, because you're a monster on LinkedIn in a good way. So tell me about, how did that transition? Like, tell me at the point where you're like, wow, this is a really cool platform and a tool. I'm going to go ahead and brand myself. How did that happen?
Thank you. Great, Chris. I love to hear that feedback, because sometimes you feel like you're talking out into the ether. It's good to know people are seeing these things.
I know.
But this is another case where this wasn't some great strategy of mine. I was part of a local networking group. One of the groups where you meet everybody once a week, and you talk about referrals. Yeah. And one of the members of that group, this is 10 years ago now, her name was the LinkedIn lady. And her job was consulting businesses on LinkedIn. And at
Wow.
the time, LinkedIn was kind of new. I didn't know a whole lot about it, but I would listen to this lady, and she had a lot of great tips, simple tips of that really center around the fact that most people on LinkedIn are passive. They're there to watch. They're there to absorb. And so with a little bit of activity, you can become very visible on LinkedIn. And
Right.
that really stuck with me. And based upon your feedback, that comes through in that, people think I'm spending all day on LinkedIn. And that's why, I'm spending literally minutes a day on LinkedIn.
Really?
But,
Yeah.
I'm posting things that I think my followers will want to see. That you'll see
Right.
it's stuff about the economy and stuff about finance, stuff about small business.
Right.
And through this little bit of activity, my stuff gets seen thousands of times a day. And so, so much of what I do is right place, right time. So if I'm constantly poking at these connections of mine, and most of my connections are referral sources. My connections are all the centers of influence that you mentioned. So I poke somebody at the right time, it gets them thinking about a need, and it results in a referral.
Yeah.
So LinkedIn is great, and there's a lot of junk, there's a lot of junk that comes through LinkedIn too.
There is a lot of junk. But listen,
spam, but
at least you're spending on LinkedIn and not TikTok. You know what I mean?
oh, yes. I haven't developed a TikTok following yet. I don't know if I've got the moves for that.
You don't have a TikTok account? Yeah.
But
Follow.
yeah, it's been a great tool for me. I dabbled in Twitter. I didn't find any value at all in Twitter, but LinkedIn I've been doing that pretty regularly for a decade, and it's been effective.
Yeah, and I tell people, we teach at CCTG. We do a whole thing on you got to go out to your centers of influence because, or the centers of influence of a business owner. If you think about it, every real estate investor or business owner has what? They have a banker, they have a CPA, they may have a wealth manager, they know an insurance person, they have a title, if they're in real estate, they know a real estate agent, but they have these people around them. And so you're doing it the right way. I mean, you're absolutely correct. And, we teach brokers to go after those people to get deals because they see deals. And and I always say LinkedIn is like its own search engine. I mean, if you want to target, you could even go to company profiles and target employees like the BDOs or business bankers of certain institutions. And it's almost like a soft intro where like you connect with somebody. Now they kind of know a name and a face, and then you message them, and then you try to get them on a phone or do whatever,
Yeah, one of the things that I've done just regularly for many, many years is everyone I interact with, I'll reach out and make a connection to on LinkedIn.
Right.
So everybody I talk to, everybody I meet, and those connections can come in handy later because, as you well know, sometimes there's a big delay between you meet somebody and you got a need that can be that you can fill for somebody.
Correct.
So it gives me some immediate credibility when someone looks me up. They see, oh, I'm already connected to them, or I'm connected to someone they know well. It's just an immediate credibility builder. It can lead to an introduction. That can lead to a deal.
You want me to tell you what pisses me off a lot?
Uh-oh. Yes.
Yeah, and tell me if you get the same sentiment because I teach this in the course, and I think so many people now I consider you're the poster child of doing LinkedIn and branding yourself. You've done an excellent job, but tell me if you agree with me, and if you don't, please tell me you don't agree with me. So I don't know. I probably don't have as many connections as you because I'm not as active, but I have thousands of connections. And what bugs the shit out of me is that, and I got the app on my phone. Someone will want to connect with me, right? And I say, okay, I'm not going to pay. I at the end of the night, I'll say connect. Immediately, 99% of time, they do a product pitch. I don't even know what they call it. DM, maybe they DM me on LinkedIn, right? So they do a product pitch, and it's like they don't even care to read my profile. Like, we're the cuckoo side. They go. For instance, like, I mean, I could show you, I'm looking on my LinkedIn right now, and it's just like guys that are like, hey man, we do merchant cash advances and this. And it's like, well, if you read my bio, like I'm a merchant cash advance lender. Like I own, I don't need you to, and they just stuff down my message box. I always say what gets my attention, which is almost never done on LinkedIn, is if somebody reached out and instead of pushing their product to say, hey, I noticed your profile. In order to get me on the phone, I want to learn more about your products and services. And so I can guarantee that gets me involved. It may not be me, but I may say, sure, I'm going to put you in touch with my VP, my vice president of business development, and they have a conversation. At least that gets on the phone. They'll never get me on the phone by just product pushing, here's how we can help you if you have any borrowers. That's done. To me, that's played out. Do you agree with that? Or do you see it happen?
Completely. Yeah, that immediate pitch after connection, that's never going to get anybody anywhere. I don't think,
It's
I
filled
think
up.
they do it 1,000 times, they'll get a hit or two. I don't know, but and any person who specializes in marketing LinkedIn will tell you
Right.
that's the wrong way to do it.
Yeah, I mean, like it's like me connecting with you, me requesting and saying, "Hey, Kris, if you see any factoring deals, let me know. I mean, I could handle this and that." And it's like I don't even read what I didn't even read what you do. But but if I connected with you and said, "Hey, Kris, I think I have some people that maybe can use your services. You want to get on a call? You bet your ass you're probably going to get on a call with me."
Yeah,
Right?
that LinkedIn connection should be the beginning of a conversation. It
Right.
shouldn't go right to the pitch. And
Yeah.
I agree. And I think it's making LinkedIn messier over time.
It is.
As more and more people are marketing in that way. That's not effective and just makes a lot of noise.
Yeah. How many followers do you have now?
Got about 15,000.
That's great, man.
It's built up over over a long time,
Yeah.
and also I've gotten a little more selective over the years, as
Yeah.
That overnight you get the invites from people in Nigeria, and like I no
Yeah.
longer accept
Yeah.
those invitations.
Yeah, we're doing 110% financing, no money down, billion-dollar projects. Just send us a non-refundable deposit. Yeah.
So many people tell you my connections I have too many. Many people tell you this too many.
Yeah, too many.
But I think there's enough good stuff in there that it leads to some
And
worthwhile activity.
I think for a lot of the brokers that are going to be watching this, that's insightful information. That's why I wanted to kind of dance around what you do very gracefully and masterfully on LinkedIn, because I think it's a tool that's underutilized, or if it's utilized, they're doing it the wrong way, as I just discussed.
Yeah, and I find and I talk to people a lot because I'll get this comment that, "Oh, I love what you do on LinkedIn. I want to do that," or "I tried that, it didn't work." But
Yeah.
like they tried it for a month, like, "Oh, and it didn't go anywhere." Well, I've been dripping activity for a decade, and now I get a regular flow of business. And it's great, maybe for the last 5-6 years I have. But it took time to build. You have to build a network. You have to become a reliable source of information. You have to have content people want to see.
Yeah.
And putting a month into it isn't going to lead to a whole new channel of activity. So when I talk to people who want to do more of this, I encourage patience and persistence, because it takes time. You got to chip away.
No, it does take time. It's not an instant gratification thing. I mean, you gotta work at it. You gotta, it takes a little patience.
Absolutely.
I think what's cool too is you've always kind of been around, at least recently, non-recourse. And I used to own a non-recourse factoring company, so I get it. Tell me the benefits of, do you really sell the shit out of the fact that it's non-recourse, and that there's not, when you're talking to a borrower, there's not a lot of non-recourse options for small businesses, unless you're real big. Do you sell that fact?
I do. It kind of depends upon the business. For some, the non-recourse is essential, where maybe the ownership structure is such they cannot provide a personal guarantee.
Right.
Or in other cases, the financial condition of the company is such that recourse would be worthless because there's nothing there to go after.
And what you're talking about is like if they're sponsored by like a private equity company, they obviously don't personally guarantee. But yeah, so I get that.
That could be one example. Or cases where just the owners refuse to personally guarantee, where they're not going to have other options. But there are some businesses that just don't care about that. They're strong enough that they don't necessarily need non-recourse. And quite honestly, Kris, those aren't great prospects for me. I kind of my niche and my target and my pricing is such that I need businesses that need non-recourse financing to be a good fit. And often, but let me just comment, one of the reasons why someone might need non-recourse is speed. Now, if you're going to find a funding source who's going to have recourse and put value behind that recourse, they got to underwrite. Because what good is recourse against a company that can never stand behind it? Right. So with recourse comes greater underwriting time, greater processing time, and I can get things done in a few days. Now, if you have time to wait and maybe find some lower pricing and you're willing to provide recourse, maybe you can get that in 60 days. I'll give it to you in 3 to 5. So sometimes that's what gets people to see the benefits of non-recourse, is the fact that I don't need to underwrite your business because I'm not relying upon it for repayment.
Now, are you guys, no, that's a great point. Are you guys doing factoring and what I call ABL, asset-based lines of credit, or it's just straight factoring?
You're straight up factoring.
Okay.
Versant, and Mark Weinberg's the owner of Versant. He's been doing factoring this way for close to 30 years now in a couple of different entities. So this is what Mark does well, and that's all we do.
Yeah, and that's awesome. I mean, it's it's reflected in what you guys do, and I didn't even know you guys worked with some of our brokers, some of our CCTG brokers.
Oh yeah,
great things. I mean, tell me about that. Do you like working with us? Not like working with our brokers. I mean, do you think our brokers are bad, good, in between? What do you think?
Well, just honestly, there's a range.
Yeah.
You graduated, I don't know how many hundreds of brokers at this point.
Yeah.
Some, I've spoken to they've got very different backgrounds and very different focuses. So there's some that are focused on real estate financing and they've stumbled across a factoring deal and they don't remember a whole lot about it from training, and that's understandable.
Yeah.
Others are choosing to specialize in this and know a lot about it or come from this world.
Yeah.
And so there's a better hit rate. But I'm happy to talk to all of them. And actually just pointing out, as I scheduled this call today, that my last couple of proposals went out to brokers of your training program.
Awesome.
So there's some viable stuff in there, and so it's a good group that I'm happy to work with.
Yeah, I always said that, like our conference too, the NACLB, just because I never understood lenders' frame of mind. I mean, I get it's a time thing, but like, yeah, there may be a broker that just walks out of here and says, look, I'm going to do fix and flip financing, real estate, right? But then they get a request that's kind of off the beaten path. That's a factoring deal. Why wouldn't you take the time to take the request? I mean, yeah, they don't send factoring deals all day long, but the common denominator is these guys network. They know people, and so.
And one of the things I always think, and I don't know if you train your people to do this, but they always introduce themselves by telling me that they graduated your program. So they always set the table on, okay, now I know who I'm talking to right away.
Right.
And I think it is an investment in time, because very often the point with the deal is not a fit, but I'm used to that.
Sure.
And I'm happy to take the chance. Well, here's a chance for me to explain what is a fit for what I do.
Right.
And I know that they're out there meeting business owners all day long, so I love a chance to refresh them on what's a factoring deal.
Well, and also too, you got to realize they're motivated. It's not like, as we know, there's bad brokers in the business too, who give the good guys a bad name, but these guys have a significant investment, so they're apt to make it work. I mean, they're trying to hustle to, make it work.
Right. And one of the things I always love to remind brokers when I talk to them is the annuity type way we pay fees in the world of factoring.
Let's talk about that. So let's talk.
Sure.
Yeah. So I'm sorry. So part of the lucrativeness of factoring, which some people don't understand, is that I think it's the poster child of residual income, if there ever was a product. So tell me about it.
Sure. And I know, a lot of your brokers are accustomed to, you close a deal, you get a check at closing, all done, which is great. And that can be a nice big check. Right. But there could be months in between those checks.
Right.
The way factoring works is we pay monthly a share of the fees that we earned the previous month for the life of the deal. So our typical deal is 24 months. It's not uncommon for them to renew. So what you're looking at is all of a sudden now you got a monthly check you can count on. That could be as few as a few $100s, but as much as thousands, and we've had some tens of thousands of dollars.
Right.
Which you're going to get every month for the life of that deal. And if it renews, it's going to continue.
Right.
I tell you personally, I've had checks from deals I closed 11 years ago. One just finished up last week. But 11 years, I got an ongoing monthly commission for one deal that I closed. And as a broker, when you're trying to work out your monthly cash flow, having that little bit of residual coming in, and it just keep closing those big real estate deals in between. But this is just kind of even out your cash flow.
It takes the pressure off. That's what I tell people. I mean, if you concentrate on factoring and you build up a good residual, and sometimes too, you know this as well as anybody, if you don't even put any more deals on, let's say after a year you close 5 deals, 6 deals, whatever the case is, theoretically that could actually grow because the company grows, right? So the more the company factors, the more, the bigger the checks will be. To me, brokers that get into this industry, they have this illusion that, they look for the big elephants, the big, I want to close this $50 million project and I'm going to get paid 1%. And they start counting they start fantasizing. Can you do those? Yes. You're not going to do those every month. You may not do it every year. You may do it once every couple of years, maybe one a year if you're in that network, let's say real estate. But the reality is you got to do the base hits. And to me, factoring is the base hits, right? It builds up.
That's a great way to put it. Yeah. Those grand slams, they happen every once in a while, but you can't count on that to pay your bills every month.
No.
And those are great if they fall in, but you build up a nice book of factoring business that can become a nice, reliable stream of cash flow. So
you've been around the broker world a long time. Tell me about, not mentioning names, but have you been what are some of the brokers who are killing it? What are they bringing in that of, or at least brokers that are sending you deals? Do are they getting 10, 20,000 a month, 30? I mean, just any, what have you,
and of course, 20,000 a month, that's certainly possible. And we've seen it happen. It doesn't happen every day.
Not typical.
More commonly, it's a couple grand. You're closing a deal and that deal is going to give you a couple of grand for a couple of years.
Right.
And that's from one transaction. But you do a couple of those, and you got a couple paying a couple of grand for a couple of years.
Sure.
And that's how it builds. There, and much like yourself, I've closed a few giant factoring deals over the years, and those are great when they last. But what keeps you going is a nice base of average size deals that stick around for a while,
Yeah.
and pay a nice chunk.
What's the biggest deal you ever closed?
Had one transaction where we were funding $6 million a month to a company that had we were factoring a single customer, and they were paying in 60 days, like clock over 60 days. So
it was one account debtor.
One account debtor.
Okay.
So it became a real, and I'm not going to close that every year, but those deals are out there. There's a large transaction we're looking at right now. And there are a few of those, and I'm not looking for those in particular, but we've got the capacity to do those, and those are nice when they happen.
No, they are nice when they happen.
But the average ones are what will keep the lights on.
The average ones, yeah.
And for us, $500,000 to $1 million a month in factoring activity, that's kind of an average deal for us.
An average
there are factors out there that love the little tiny stuff. That's not really for us. But $100,000 to $10 million a month is where we do most of our business.
Is that where you could do most? Yeah, that's kind of the sweet spot. What do you think, in terms of, let's talk of brokers, because that's who's really going to watch this. And I mean, what do you think some of the biggest mistakes brokers make when trying to do factoring or even working with you, no matter where you were at? What are some of the pitfalls you think?
Well, what I tell a lot of brokers is, I think a mistake they often make is trying to act like they know everything. They want to be the expert to their client, and I get that. But when you aren't yet a subject matter expert, rely upon expertise. And what I've said many times is, pull me in as Chris, your factoring specialist. Don't even say who I work for. I could work for you for all they know.
Yeah.
Just bring me in as your factoring specialist. Be on the line with me as I ask questions to your client, because we can save the client, everybody, a lot of time with a couple of simple questions that they'll quickly learn to ask early on. But versus bringing somebody down the path and collecting information and then realizing, if you just asked them this, you would know this isn't a fit.
Yeah, that frustrates the shit out of me when a broker tries to be a barrier. Like I always say, look, with our lending institution here, both for MCA and real estate that we do directly, I instruct my guys to tell the brokers, have them get you on the phone ASAP. In fact, we make it a requirement because it makes no difference to the broker. We pay them the same. But as soon as you get us on the phone with the borrower, we have we've noticed a 30% increase in closing the transaction, because people tend to the borrower tends to act a little different when they know they're on the phone with a check writer. Does that make sense? And so
I believe it. I think that's I've never seen stats on it.
Barrier. They try to be this barrier. Like, no, you can't talk to the borrower right now. Like, why not?
Yes. There's a lot of brokers will be very protective of their relationship with their client, and unnecessarily so. I'm not going to try to go around them, but I think often it's a bad experience. The broker once was cheated out of a commission.
Well, either that, or you know what I'm going to say next, which is bad etiquette in the industry. They don't want you to talk to the borrower because they're working 3 other proposals. I mean, that happens.
There's plenty of that
borrower because they're waiting for you to kind of structure the deal, and then they're going to take that proposal and bring it to somebody else. Say, hey, can you beat this? That happens in this industry. So it's either one or two things.
Absolutely.
And we always tell people, look, if you get involved in that, you're going to lose a relationship, because the next time they send a deal to you, are you really going to spend the time to kind of price it out?
It can be a little short-sighted, and I think it's better to be upfront with your funding source if that's what you're doing. And sometimes your client insists that you do that, and I get it. They want to see a few offers, but I'd rather they be upfront than trying to hide the fact that there's multiple offers out there. Yeah. And also, I know if there's multiple offers, I'll also help the broker understand my offering, how it might differ from somebody's.
Right.
Not every factoring deal is the same. It's all called factoring.
Right.
But as you well know, the way it's priced, the way it's structured, the way it's serviced can be very different from factor to factor. So I can help them provide an informed, help the client make an informed decision on which funding source to choose.
Yeah. Do you sell, do you educate? So we educate our brokers on this fact. I'm wondering if you do it with your clients, where, we instruct people to say is, look, tell your borrower, everybody knows you get the money quick. That's played out. You get the money quick. Yes. You don't have to wait 30 days, 60 days, whatever the term is. Mm-hmm. But I think equally as important as getting the money quick is, essentially knowing that from the borrower's perspective, that they have an in-house credit team. Because if ABC company comes to them and says, okay, we want to buy 100,000 of your product, most businesses in the United States, they'll do a PO, fine, you could do a contract, and they'll send those goods or provide the services without having a goddamn clue what the credit capability is of what we call the account debtor. Whereas a factor, what we used to do is someone would come in, and once they have a relationship, they would come to us and say, look, can you tell us what the credit capability is of XYZ company? We would say, look, we're going to approve them up to 100,000, or we won't buy any more of $100,000 worth of invoices. And essentially what we're telling the business owner is, look, you probably shouldn't sell more than 100,000 because that's all they're good for. Do you educate borrowers on that at all?
Oh yeah, and I can tell one of the things I've told clients time and time again is it's not uncommon that the reason why a business has come to us for help is because they got screwed by one of their customers who didn't pay.
Right.
Because as you point out, they don't ask any questions. You want to buy my stuff? Here, have my stuff. Not putting any analysis to whether or not they can pay for your stuff. So yes, one, we'll tell you what we think. We might tell you we love that customer, sell as much as you can. Right. We might tell you they're okay at this credit limit. And we might tell you better get a big deposit or COD because they're not worth anything.
Yeah.
And so yeah, that we provide them that valuable credit information on their customers.
Yeah, they don't realize that. I mean, a lot of brokers don't sell it that way. They just say you get the money quick, but it's like, who gives a shit? Everybody sells the fact that you get
right, and that's right. That's not enough just getting it quick. But another thing that I like our business to think about is, and this comes from the fact that a lot of small business owners are salespeople, so they just want to sell. Let me just make that sale. Don't worry about the rest later.
Right.
But also, small business owners aren't great at tracking accounts receivable. Many of them do nothing to track their accounts receivable. They send out the invoice. When the check comes, great. So they're just letting these languish. So we find that when small businesses use us, their receivables pay better. Well, for one, their customers tend to be a little more on the ball because they know they're paying a factor, and we report to credit reporting agencies.
Right.
We monitor. So if a business tries to take a discount that we're entitled to, we raise a flag. We make sure the client knows about it and decides whether or not they're going to allow that. So we find that receivables pay better with us, faster with us than they would through if they were handling it on their own.
Yeah. Yeah. No, I mean, I'm glad you guys do that. I mean, I don't know why more. And I've met other BDOs of factoring companies that don't even sell that. They keep selling the fact that you get the money quick, and there's not really. There's other benefits.
There are absolutely, there are other benefits, and we can help open people's eyes because they don't often put a lot of thought into who they're selling to, and we force them to think about it in terms of the creditworthiness of the customers.
Right. Right. What's the best thing you like about your job?
Well, for one, I like that I'm on my own. I'm a BDO. I'm here in a room in my house, and I've been doing this way for about a dozen years. I like that it's completely up to me as to how I market this business.
Right.
So the autonomy, I think, is great. I love the kind of business that I'm able to help. Kind of the discarded, the underappreciated, maybe the diamond in the rough. I love that I can help that kind of business and get them to the next stage. Sometimes one of the things I don't love about what I do is my relationship is very short with the client. We identify them, get them approved, get them funded, and then they're gone. Then I'm no longer involved, and they tend to move on in a couple of years. So I don't have long-term relationships with the clients, but we very quickly help them get to that next stage of the revolution for a business that others didn't want to bother with, and I like that about the job.
Right, right. And what I guess, why do you, in your opinion, why do business owners leave a factoring arrangement?
Well, a bunch of reasons. A lot of times they outgrow their factor. Mm-hmm. Many factoring companies, you all know, they just don't have much capital, so they can't handle a business over a certain size. We don't encounter that quite so much, but a lot of factors just they outgrow their factor. Right. But a big push is the cost. I think a lot of businesses, they see, well, the bank is offering me this cheap money. I got to take that cheap money. Now they often regret some of that move because that cheap money comes with a lot of strings attached. I was talking to a client this week where one of the reasons why he's thinking about leaving his bank is the reporting. The reporting requirements of the bank are killing him. The time he's spending on reporting.
Right.
But they're often lured by the promise of cheap money. So they'll leave a factor for cheaper financing, not realizing how much flexibility they had that they maybe had taken for granted.
Right. Yeah. That's a good point. Tell me about I'm going to take you back to marketing. I mean, you do
Yeah.
a very good job at networking and marketing, and I think there's a lot of good tidbits that brokers can take away from this, particularly how you network on LinkedIn. But tell me about a typical day, since you do kind of work for yourself. You are with Versant, but you're kind of your own. It's your own destiny, right? In terms
Mhm.
of how much you bring in. Tell me about, and I think I'm trying to set a parallel of how brokers can model this and,
Sure.
and be successful. But tell me about a typical day. What do you do when you get up and before you go to bed? I mean, are you on LinkedIn
Sure.
10 hours a day?
Well, LinkedIn is always open. It's
Yeah,
always open.
yeah,
So I'm working on LinkedIn all day, but at 30 seconds at a time.
yeah.
For one, no, I always start the day with LinkedIn to see what happened overnight.
Right,
And one great feature of LinkedIn as well is helping keep track of where people work. People change
right.
jobs regularly. So
Yeah,
the fact that I've gotten an alert that a referral source of mine is now with another company, well, I'm going to want to capture that, you know, try to get a conversation with them to figure out what they're doing now,
right,
capture the contact information.
right.
Because also a big part of what I do, I know we talked a lot about what I do on LinkedIn. Email marketing has been a great tool for me as well.
Sure.
So something else I always want to capture for everybody I interact with is their email. So a little bit on LinkedIn, I'm always posting something,
Yeah.
probably in the morning, maybe sometimes in the afternoon as well. I try to mix in some actual content, articles, charts, content about the world of finance, economy, small business, and I try to mix in the occasional just blatant plug for me and what I do. So I
Do,
try to mix
do,
those.
do you, and I'm getting a little personal here. Do you have a wife?
I
Kids?
do. Yeah.
Kids?
I've got a 13-year-old daughter.
Okay. So like, does your wife bust your chops that like you're like a social media whore, always on social media? Are you
She's
are you on
gotten used
social
to
media more than your 13-year-old?
it. Well, yes, in ways I am. She loves
All right.
YouTube more than LinkedIn, but yeah, she
Yeah.
spends a lot of time on YouTube, but I might
Okay.
rival her on LinkedIn.
Is your
But
wife
it's
like, Chris, why are you on social media all the time? I mean, no,
but the thing is, I'm on it frequently, but in little tiny bits. So it's not like I'm just like spending hours looking at LinkedIn.
you're not at dinner with your wife and scrolling through LinkedIn and trying to make connections.
It's a quick in and out. It's a quick in and out. But it's useful because again, I'll find out where people go
I
and you
know,
get those
man.
new
Yeah.
contacts. For that, it's great. Also, I'm getting, the more time you spend on LinkedIn, the more actual message you get on LinkedIn. So there could be
Right.
leads that arrived overnight through LinkedIn.
Oh,
I
I
want to
know.
make sure I follow
Yeah.
up on those
Yeah.
properly.
I don't open it up all the time, but when I do, it's like your face is right there. And I'm like, God, this guy has it down.
That is great to hear because that is my goal. My goal is sort of for the person who's on there occasionally.
Yeah.
Every time they're on there, they're going to see me. And they
Can't
probably don't
argue.
need me most of the time, but once in a while they will. Because at least the way I've found to market this product is it's a product that most businesses never need.
Hmm.
And those that need it might need it once in their lifetime. So I got to
Right.
find their referral source at the right time. So that's why I'm poking a huge group of people pretty regularly.
Yeah.
And I've got referral sources that I'll hear from once every couple of years, and that's fine.
That's fine, but you
But
got a lot of them. Yeah. You
I
got
got a lot of them. But I got a lot of them.
right.
And I love, for example, when I'll get an email from somebody responding to a message I sent them years ago that they had
Right.
filed away,
Yeah.
and they all of a sudden have a need for me. Or the same thing on LinkedIn happened today, where somebody called me. We were connected on LinkedIn for years. I haven't spoken to him probably 7 years, and he had a need, and he remembered me. We
Wow.
haven't met in
Wow.
person in a very long time. We haven't interacted in a very long time, but he saw me on LinkedIn. And
Yeah. Well,
prompted
because you're
the
doing
call.
constant posts too. I mean, you're posting, you're staying in front of people, and they're like, I mean, listen, I'm in the business, but like if I wasn't in the business and and let's say I was a broker who maybe only did one thing like equipment financing or, I mean, shit, the way you market yourself, I would say, hey, if I got a factoring deal, I'm going to send it to this. I'm going to call this guy Chris up because you're always marketing yourself. So
You're describing my strategy. That is what I'm hoping will happen, and
yeah,
it does.
you
It
do
does.
it well. You do it well. All right. I'm going to get a little quirky. So you ready for some little Q&A?
All right, let me hear it.
All right. All right. Um, so, if you were, if you weren't in finance, if you weren't in finance at all, you weren't the factoring king, um, you know, uh, yeah, maybe we'll call you factoring king, like Tiger King. But if you weren't in factoring, what would you be doing? What would you want to be doing? Like, what's a
Oh,
dream career? Yeah, like, you have a fantasy about like being someone or
and I think fantasy is a good word for it because I just spend so much time in this room, staring at these computer screens, that sometimes I wonder what life would be like as a park ranger,
really?
where my job is to be outside like all day, doing something with the trees. Now I realize I have no qualifications for this. it's probably a lot harder job than I think. And I probably wouldn't make nearly enough money to be happy.
Right.
But it's just like, when you've gone days without leaving the premises,
Yeah.
and it's like, oh,
No.
look at how nice it is outside. I got to get out there.
Yeah, I got a funny story about that.
Yeah.
So when I was in high school, they made me take one of these, here's take this exam, and this is what you're going to be for the rest of your life, right? I remember I
Right.
fill out like, Christ, it was like probably 250 questions, right? And it's like this thing that I was supposed to like say, this is the career for you,
Right.
I remember I filled out all these questions, and at the end it said park ranger. It literally said park ranger, and I'm like, how the hell? I don't do really anything with woods. I don't do, you know what I mean? Like, how the hell did you come up with park ranger? And so, yeah, that's funny that you said that. Funny that you said that.
Yeah, total fantasy. I'll never do it, but in those days inside, I sometimes wonder.
Besides being the factoring king, what if someone were just to look at you, what would they be surprised? Like, be surprised that you're into, or some type of quirky hobbies, or anything without taking away the factoring?
Right. Well, something that would surprise people who know me is that I am in no way handy. I don't do anything that involves tools, that involves projects around the house. If something needs to be done, I hire people to do those things.
So your wife doesn't give you a honey-do list?
She knows honey can't do it, so no, she does not. She does not. We have to outsource any type of duties. But we got hit by a quick little tornado here, and I live on a real wooded property. Knocked down tons of trees, like 24 trees.
Where do you live, in Jersey?
No, I'm in Fairfield County, Connecticut.
Oh, Connecticut. Okay. All right. Yeah. All right.
Not a place you're supposed to get tornadoes, but anyway, we had one. Yeah. And what I've been doing is I've been chopping up all those trees and cutting them up, splitting the wood.
You have a fireplace?
Hours every weekend splitting wood, and I've got like now piles of firewood all around the house, and it surprises me.
You so have a fireplace though?
I do.
Oh, okay. All right. Cool.
We got a couple. So I wanted to buy firewood for years. I must have 3 cords of wood at least out there now. It's not more.
Well, you could do a little more. You could do a little side business maybe.
It's tough on the shoulders sometimes. But,
well, at least you work out. You're getting out of the street, right?
In a way, it's a little bit like my marketing technique. Is I do it. I've been doing it a little bit at a time, and the effects build up.
Right. That's cool. If you could sit down with any person, dead or alive, and take 2-3 hours of their time one-on-one, who would it be?
I might be thinking this because I recently saw one of his videos on YouTube, but I would say George Carlin. And he's been dead for about a dozen years now, but was always a big fan of his comedy. From a little kid seeing his stuff on HBO.
He was great.
I love his bits on like society, on religion, on I think it'd be an interesting meal.
What was cool about George Carlin was, you would, same thing, like back in the day. You remember back in the day when like HBO was like
big deal.
Like you could go on there and people would curse and and there would be like sexual content, and it was like HBO was like this cool thing where people talk dirty. And I remember an early memory where he turned on a special. He had that special on HBO. George.
Yeah, remember I was probably a little young to be watching it at the time.
But man, he was dropping F-bombs and he was saying this, but it was cool though.
We didn't hear on TV at the time.
You didn't hear on TV at the time, so that was the cool thing about HBO. Well, that's awesome. All right, now comes the time. Is there anything you want to ask me off the table? Personal, business, doesn't matter.
One question I have for you, I know you've trained at this point, there are probably hundreds of brokers.
Yeah, over 1,000 actually.
Is it? Oh my God, 1,000. Yeah. Have you had him to become through your training where you go, what? This guy's untrainable. I cannot help this person. He cannot be trained. He will not take my advice.
That's a great question. Yes. So here's my philosophy. Who am I to deny somebody an opportunity, right? Mm-hmm. Because there's people that have went through this training that I would have guessed I would have said, man, this person's going to have an uphill battle. Like for instance, we had a truck driver. No disrespect to truck drivers, but on the front end, you wouldn't think, truck driver. If you go out to the general public and say, hey, you think a truck driver can own a finance company? And they'd be like, what? You're crazy. We had a guy come through here. He was an owner operator, drove trucks. He walked out of here and he's one of the top producing truck financing brokers now for one of our leasing lenders. Wow. So he took what he didn't give a shit about anything else, real estate, factoring. He walked out of here and he had one skill, and that one skill was he knew trucking. He knew the people, the dealerships. He knew how to talk. He went out And now that's all he does, and he gets to stay home. And so that's like, wow, look at that, right? But there have been some people, not mentioning names, where the way they conduct themselves, I mean, I can just teach the opportunity, right? When you leave here, it's up to you. You know the guidelines. I can't control you physically, right? I'm not there at your office, but yeah, we have some people that just don't listen. And I'm not saying that like whatever we say is the Bible and gold and, is the right way, but just people that are naturally, they just don't listen. They don't take advice, and they go out and they do the wrong things, like pissing off lenders. We've had some graduates that have pissed off lenders to the point because they're not doing things ethically, like they're like they're sending things to 10 lenders at once and saying, "Hey guys, give me the best rate," and our lenders are like, "Yeah, you're freaking crazy. We're not going to give you the time of day if you're shotgunning a deal." And so, and then oftentimes we'll get the call years later, "Oh, so-and-so canceled me, can you get me back in there? So-and-so won't take my business." And it's like, well, what the hell did you do? And come to find out they're doing things. So yes, I won't tell them in their face, look, now we've had people that have almost pulled the trigger, and they come right out and say, "Look, I don't want to talk to people. Is there any way I could do this business without talking to people?" And my salesperson, my enrollment person would say, "Look, this isn't the business for you. Like, this is a people business. If you don't like talking to people, go to a Subway. I mean, I don't know, sell sandwiches, do whatever." But so we're really upfront and honest. We don't want to mislead people. I think we do a good job of telling people exactly what this is about, that you got to work hard. It's not a get rich quick thing. You got to put time into it. And we're very upfront with that. And I think that's a reason why we're successful, because there are some people that I don't care what package they buy or how much money they're willing to give us. We won't take their money because they're coming in with a mindset of, I don't want to talk to people. And so if I did take their money, we put them through training, they're going to get pissed off because it's not what they thought it was. And it's not going to be good for you guys, for lenders. I mean, you're not going to get any productivity. So the short answer is yes. Yeah. Yeah.
I'm also curious. I know you've had to adapt this business. Like, this was an in-person, around the conference table type of business.
Right.
And now you've gone to virtual, and it sounds like it's working quite well for you. But is there anything that keeps you up at night as to what's going to happen next that your business is going to have to adapt to? Anything you're worried about coming down the pike?
You know what? I'll tell you this. So in my career in finance, I went through now what I call 3 turndowns. 9/11. If you remember back in 9/11, that year after that, things were weird, right? Certainly 08, but I came out really well in 08 because I was diversified. So I went where the market was. So real estate took a hit. Absolutely. Right. A lot of SBA took a hit, but there were other certain like MCA was essentially born after 08. Right. Because so I did fairly well in 08, but it was still a downturn. So we had to adjust. And now recently with COVID, compared to 08, COVID was really, to me, it wasn't that bad, but, it's just all about reacting. So for a lot of our actually all of our CCTG brokers, we started in 2009, right? This is their first downturn, because after 09, things started coming back, things were getting better. And I got so many emails in the last, I'd say 4 months, where brokers our grads would email me and say, "You know what, Kris, I didn't appreciate the model as much as I do now because we adapted. A lot of them adapted to PPP. We had guys that were focusing on real estate, knew nothing, didn't even want anything to do with SBA. And all of a sudden that dried up for a couple months and they automatically reverted to PPP. And we did a tally a couple months ago. Our grads did over 200 million in PPP loans.
Wow.
And so, and it goes to, you have to be diversified as a broker, right? Because your industry you're in could be doing great. Equipment leasing is a great example. Before 9/11 hit, equipment leasing was great. That year after, 2002, a lot of leasing brokers went out of business because nobody was buying equipment. They weren't buying newer, equipment sales went down. And if they didn't have any other product segment to resort to, you're screwed, right? Or if you're a mortgage broker in 08 and that's all you knew how to do is commercial mortgages, you're done. Same reason why you were out of BLX. You guys stopped doing SBA, right? You were concentrated. So if you ask me, did we adapt? We did. It was a big change for us to adapt to virtual because I always said you got to be in here in person. I'm a personable guy. I like looking in your eye. I like interacting. But I think now, we've had some of the biggest classes ever. And, moving forward, we're going to offer both options. When you can start
Was that
coming
right?
live, we're going to have a camera in here where people can learn from a home, or they could be here in person. We're going to give them the option.
Oh, great.
Am I worried about anything? I guess, you're always worried a little bit about the economy. You don't want to see businesses go out of business. I hear there's a third round of PPP. So, we're kind of gearing up for that. That's going to come eventually in about a month or two. But no, I think we're good at, I'll tell you what my team is good at, about adapting quickly. So if something were to happen and we had to adapt again, man, I remember it was like overnight where my team adapted, literally. Like they came in one day, they got all their stuff. We started working remotely. I was still in the office, but we set up systems in order to do it, and we adapted really quickly. So I think I attribute our ability to do that with the good team we have here.
I think that worked out so well for you that people like it.
It is, yeah. I mean, well, people save money too. They don't have to pay for hotel and travel costs, and they can learn from their home. Yeah, it sucks that I'm looking through a camera for 8 hours a day for 7 days. Yeah. I mean, that's a little hard as an educator, but we've made it work. I mean, and we've attracted a lot of talented people. We just had an NFL Hall of Famer come through class.
Is that right?
Yeah,
interesting.
Last week. So we're getting good people in the door and hopefully productive. And I think, look, the bottom line is people always need capital, as you know. I mean,
and honestly, a little bit of recession can help for that, where banks,
especially what you do.
And your brokers as well. If a business get everything they need by walking into their bank, they don't really need to call the broker. But if the banks get a little tighter, that's when there's more of a need for some professional assistance.
Well, and also I think some people that would be approved by a bank on what I call a traditional line of credit, those things go away when the economy goes down. I mean, banks aren't doing that stuff, so they have to resort to a product like you have.
I think there's a big credit contraction that's going to be coming. That's going to
What do you like to do for fun? What do you like to do for fun?
When I'm not chopping wood.
Yeah, you're not on LinkedIn. What do you like to do for fun?
I like to go into a nearly hibernative stage where I sit around here and watch TV and sitting on the couch. That's ideally what I'll be doing.
That's cool. All right.
How about yourself?
What do I like to do for fun? I'm trying to think of something that I haven't already said already on previous podcasts. But what's a unique thing that I like to do for fun? I said this many times on podcasts. I mean, I like cars.
Oh, really?
Yeah. So I
driving them, fixing them?
Yeah, both. All the above. That's I love doing that. And I also play the jazz piano.
Is that right?
Yeah. So
very cool.
I once in a while hop on and play something, but I don't get a chance to anymore. And one of my things is I'd love to get a bunch of guys together and play somewhere, but my age, everybody's older, they got families, kids, and it's hard to group.
Have to find the time. Yeah.
All right. Well, listen, Kris, that was awesome. It was great to finally get to know you a little better.
Yeah, thank you.
We've had a little bit of relationship here, but it was good to finally pin you down and see what your secret is on LinkedIn.
No, thanks. And please keep cranking up those graduates. Every time another batch comes through, they go into my database. I reach out, I connect with them on LinkedIn, and I keep open. So
and I appreciate you working with us, and you're a great vendor for us, and we've heard a lot of good feedback from our folks. So
terrific! No, thank you so much.
Keep doing what you're doing. So, all right. Well, that's it for this episode on entrepreneurs in finance. Kris, again, thank you from Versant Funding. You've been a great partner of ours, and we hope to be a partner. Continue on the relationship here for many years to come. Thank you so much.
Looking forward to it. Thank you.
Thanks, guys. We'll catch you on the next one. There are just too many commercial loan brokers that don't have a damn clue of what they're doing. All we're trying to do here is better the industry for everybody. At the end of the day, you can make great money in this industry, but in the end, it's all about helping people. People always say, Kris, how can I be a successful broker? It's 2 words, hard work and dedication. If you don't like talking to people, you probably shouldn't be in this business.